And this is the Morning Blast. And there is Michael Brown. Let's get him involved. Whilst he's joining, let us read the legals. As usual, nothing discussed in this space session constitutes trading or investment advice or infers any endorsement by PIQ Global Limited, trading as PIQ or PIQ Suite, or indeed the hosts, which, as you know by now, is Mr. Michael Brown, way, and Mr. Ryan Paisley, way. Good morning, my friend.
Good morning, Ryan. Good morning, everyone. Happy Friday and happy end of January. We've finally finished what
Yay.
feels like almost finished the longest month of the year.
Oh, God, how long has it been going on for?
Almost as long as it's taken me this morning to try and work out the vagaries around moving my phone number from one network to another, which is a pain, let's put it that way.
And we all know you're a dab hand at technology.
Oh, absolutely. I mean, this is really my forte, and it's not going particularly well. So if I go off grid at some point, don't worry, I haven't been abducted. It's just that I've buggered it up, I think.
Brilliant. What's been going on, my friend?
Indeed, what has been going on? Plenty to get through once again this morning. Equities having a decent day yesterday with the S&P 500 and the Nasdaq 100 rallying by around about 0.5%, and extending on those gains actually this morning after some decent earnings after hours from Apple yesterday, which we will get onto momentarily. In terms of yesterday, though, I guess the big fundamental highlight was, of course, the ECB's first policy decision of the year. Excuse me, the governing council, as expected, delivering a 25 basis point rate cut, lowering the deposit rate to 2.75%, marking the fifth rate reduction of this cycle, with the guidance accompanying that rate cut very much in line with what the ECB have been saying for some months now, in that they will continue to take a meeting by meeting and data dependent approach to setting monetary policy, and that they are not making a pre-commitment to a particular rate path. President Lagarde also very much stuck to that script at the post-meeting press conference, though it was notable that Lagarde flagged how yesterday's decision was unanimous, and that a 50 basis point cut was not discussed. It was also interesting that Lagarde noted that policy remains in restrictive territory, i.e., implying that there is further room to lower rates. Although Bloomberg sources reports that dropped after the press conference noted that the ECB may consider losing that restrictive wording as soon as the next policy meeting, which is in March. That would, of course, be somewhat logical, because if the ECB do indeed deliver the 25 basis point cut that markets expect at the March meeting, that would take the deposit rate to 2.5%, which is roughly the top end of where most economists expect the neutral rate to lie within the Eurozone. Nevertheless, the ECB very much not rocking the boat at the first policy decision of the year, and the euro largely taking all of that in its stride, although we did see a little bit of a run higher to around 104.70 as the ECB press conference was going on. But that was more in a reaction to what at face value was a relatively soft fourth quarter GDP print out of the United States, with the economy having expanded by 2.3% on an annualized quarter-on-quarter basis in the final 3 months of last year, below both the 3.1% pace seen in Q3 and also below the 2.6% consensus. Having said that, when you dig into the details of the report, they are relatively strong. Personal consumption, for example, rising by 4.2% over that period, up from the 3.7% that we saw in Q3, and that solid pace of consumer spending should continue to underpin the economic expansion in the United States. And as a result, we did see those brief dollar declines pair, and the dollar index continuing to trade with a 108 handle this morning. In terms of other data yesterday, we also had GDP figures out of the Eurozone, where the economy stagnated in the fourth quarter of 2024. Of course, that is quite considerably poorer than the 0.4% growth that we saw in Q3, but not entirely unexpected given how many downside risks the Eurozone continues to deal with. And of course, we also had the weekly jobless claims figures out of the States as well, continuing claims in the week to the 18th of January down to 1.858 million from a prior 1.899. And of course, that continuing claims print coincides with the January non-farm payrolls survey week. In terms of other market moves, we did see a relatively choppy day in the Treasury complex, although some modest softness creeping in, with 10-year yield rising by about 2 basis points on the day, trading to 4.54% in early trade this morning. And I guess perhaps the most notable move is that gold has found its shine once more. With the yellow metal glistening once again, trading north of $2,800 an ounce and to fresh record highs in the spot market, surpassing the peaks that we saw last October. In terms of news, obviously we did have those earnings out from Apple yesterday. They traded about 2% firmer in the post-market session yesterday, delivering top and bottom line beats, although once again, revenue in China was considerably poorer than expected at 18.5 billion, down from the 21.6 billion consensus. A few other bits and bobs just to run through very briefly. The Washington crash, the mid-air collision that we were discussing yesterday. Sadly, it seems that there have been no survivors from that. Investigations obviously continuing. And then a few in the tech sector. I can see Tom Tortzcars is on the call. The first is the Wall Street Journal reporting that OpenAI are in talks to raise up to $40 billion worth of funds at a valuation of around $340 billion. And a couple lastly on NVIDIA. The first is that the US are continuing to investigate the whole DeepSeek shenanigans, focusing on whether the firm actually managed to obtain these NVIDIA chips via Singapore. Of course, I think I did see a breakdown, I haven't done it myself, of NVIDIA's revenues, and a surprising amount of them do go to Singapore. It doesn't take me to tell you that if it is found that they've been going through a back door here, then what is likely to happen is Trump will probably throw some tariffs around, because that's the way he deals with things. And last but by no means least, a headline that I have absolutely no idea what it means, but Bloomberg were running it as a red headline, so it must be important. I'll read it out verbatim and hopefully someone can translate. And that is that NVIDIA is reportedly set to approve Samsung's 8-layer HBM3E AI memory. Now, I thought HBM3E AI was a sort of Star Wars character or something, but apparently that's important. So, if anyone does understand what that means, then please let us know.
Well, yeah, quite. Thank you for that, Mr. Michael Brown. You've read out all my equity headlines, so that's going to make my job a lot easier. The headlines via our dear friend Zach from the Overnight News Roundup. Unfortunately, there'll be no Overnight News Roundup next week because he's skiing. And Judith Chalmers. But anyway, so whilst we got him, few headlines. In macro space, US President Trump's renewed pledges to slap 25% tariffs on imports from Canada and Mexico on February the 1st jolted foreign exchange markets late in New York trading session on Thursday, sending currencies from both countries plunging against the US dollar. Although moves have faded since, Trump said he would soon decide whether to exclude Canada and Mexico oil imports, specifically oil imports, from the 25% tariffs. He's vowed to impose on Saturday. So it's going to be a bit of a crunch day on February the 1st from all intensive purposes. Trump warned off BRICS members from replacing the US dollar as a reserve currency by repeating a 100% tariff threat that he made weeks after winning the November presidential elections. Over in Germany, Germany's conservative leader Friedrich Merz is stepping up his hardline immigration push despite growing backlash over his move earlier this week to force a resolution through parliament with the backing from the far right. Over in Argentina, a rare success case at the moment, Argentina's central bank cut its benchmark interest rate by 300 basis points to 29. They cut 220.
What's going on here?
Right. I was getting a bit confused by the headline. They cut it to 29%. You're not used to saying interest rates at 29%. Give me some credit.
True.
So they cut by 300 basis points to 29% as inflation continues to slow. In crypto, and obviously you'll get far more crypto news from Cam when he does the crypto blast very shortly. The SEC approved part of an application for a novel ETF that would track Bitcoin and Ether, providing investors with a balanced exposure to the two digital assets weighted by their market capitalization. And in geopolitical news, Israeli PM Netanyahu will hold security consultations today to discuss the possibility of stopping the ceasefire deal and possibly returning to fighting immediately. That's Al Jazeera citing Israeli press. And also, finally, with geopolitical news, a large majority of EU nations have called for a joint letter by 19 of the bloc for the European investment banks to do more on financing the defense industry. And obviously, this comes as Trump's basically saying 2% of GDP isn't enough. He wants nearly 5% of GDP spending per NATO country. And also, let's be honest, especially when you look at Germany and such, like the defense industry is basically the only thing that's going strong. So it's no wonder they want to kind of
Yes,
try and
indeed.
funnel some money into that. But that's it for me because you've done my equity headlines.
Well, thank you very much indeed, Brian. Hopefully you can still hear me. By the way, one of my headphones has just died, which is rather strange. So things are going swimmingly over here this morning as usual.
Our tech correspondent.
Oh God, indeed. I still haven't managed to find out what that AI nonsense was all about, by the way. But anyway, we'll move on. In terms of today, then, there are a few bits and bobs on the data docket that are worth bearing in mind. Speaking of Germany, actually, we do have flash inflation figures out of Germany at 1 o'clock this afternoon. CPI seen at 2.6% on an annual basis in January. That will be unchanged from the pace seen in December. And of course, those figures come ahead of the Eurozone wide inflation data, which we have due out on Monday morning to kick off the new trading week. Over in the United States and North America at 1:30 this afternoon, we have November's GDP figures out of Canada, where the economy is set to have contracted by 0.1% on a month-on-month basis. Very stale and clearly focused on Canada is elsewhere, so I don't think that's going to move the needle too much. Meanwhile, excuse me, out of the United States, we have the latest core PCE figures due this afternoon. The core PCE price index expected at 2.8% in December. That would be unchanged from the level seen in November. And actually, Fed Chair Powell in the press conference on Wednesday, it pretty explicitly said that that number is going to be 2.8%. So there shouldn't be any surprises there. Also at 1:30, we have the latest employment cost index figures out of the States. That index seen rising by 0.9% in the final 3 months of 2024, a modest quickening from the 0.8% pace that we saw in Q3. And then lastly, in terms of data, at 2:45, we have the Chicago PMI figures. That index is expected at 40 from a prior 36.9, although as always, do bear in mind that that data is released 3 minutes early to MNI subscribers, so you could potentially see some volatility if there is a big deviation from that consensus. In terms of other bits and bobs, worth bearing in mind that today marks the end of both the Fed and the ECB speaking blackout. So we are likely to have
Ooh.
plenty of policymakers on the wires. In terms of scheduled remarks, only the Fed's Bowman and the ECB's Vilroy are on the calendar, as far as I can tell. But it would not be at all surprising if there were many other speakers besides just those two. Corporate earnings today before the market open. Big oil is in focus with ExxonMobil and Chevron due to report. So we'll see whether they report some slick figures and their shares
Oh,
start to barrel higher. And last but by no
oh
means
no.
least, as Ryan alluded to a little bit earlier on, potential for gapping risk this weekend is huge. Of course, we are, well, just hours away now from this 1st of February date where Trump has said a number of times and obviously said overnight that he will be putting in place tariffs on imports from Mexico and from Canada. To be honest, I still don't think the market has actually taken this particularly seriously. Obviously, we had that sort of big figure and a half spike in dollar CAD overnight, but we've come all the way back down from a high of 146 to trade this morning at 144 and a half. Similar story with the Mexican peso. So naturally, if we were to get tariffs imposed over the weekend, you would expect both the loonie and the Mexican peso to open quite substantially softer when markets get underway again on Sunday evening. And you may also see a bit more of a sort of broader risk-off move if, particularly if Trump
So
hasn't carved out oil as
on
well.
this, it does. Tell me if I'm wrong. Please disagree with me. And obviously, this is not trading advice or anything like that because do not follow my trades unless you want to go end up in the poorhouse. But it does feel like that. it's kind of one-sided kind of risk for a weekend trade, right? Because if he doesn't impose tariffs, I don't believe, like you said, I don't believe that the market's really priced them in anyway. So if he doesn't, and on Monday we open up, or Sunday night we open up, and there's been no tariffs, I don't really think the loonie and the peso will move that much. However, I think
No, I would agree.
if he does over the weekend, say right, here you go, 25%. See how you like those. We will obviously get a significant move. So it does feel a bit, a bit of a risk reward opportunity on that front.
It
Please tell
doesn't.
me I'm wrong.
Well, I was going to say, please don't trade on the back of what we're saying because well, I'll speak for myself. I know fuck all, and let's be honest, it's Ryan as well.
Wow.
But I think you're right.
Look, just because I'm recording this in my pants.
Oh God, thank God there's no camera. But no, I think you're actually right.
Oh God.
Because let's say for example we get to Sunday night, the market opens, there's been no tariff announcement. Is dollar CAD going to fall all the way to 142? I highly
No,
doubt it because the sort of spectre of tariffs is still going to be kind of dangling over proceedings.
exactly.
So I think actually, and it always makes me a little bit nervous when you have situations like this where not only do we agree, but also the trade seems really obvious because you almost
Oh
sit there
yeah,
and go,
no,
"What the hell
exactly.
am I
Yeah,
missing?"
please do
But
not
I think you're
trade on
right.
this because you will do your
I,
ass.
I think it is a case of it's a binary thing where if there's tariffs, the Canadian dollar and the MEX are substantially softer. If there's no tariffs, it's kind of a short-term reprieve, and maybe we get kind of 20, 30 pips worth of
Yeah,
strength,
he's
but
still going to be
nothing
holding it
worth
over.
writing
Like
home
he's
about.
going to be, you know, highbrow Ryan has entered the chat. It's still going to be the sword of Damocles that he's still going to be holding them over their heads, right? Even if he, what's
Sword of
the bet?
Damocles, God, get you this
Take
morning.
that, take that, stick that up your ass. But like, even if he didn't impose tariffs on Saturday tomorrow, he's still going to say, "Oh, but I will," but that will change if you don't agree with what I want to do.
Yeah, absolutely, absolutely.
Oh God, this is really scary, isn't it? The fact that we really do agree. How
Yeah,
do you like
shall
those
we
apples?
end things now before
Yeah,
it
I think
gets
we
even
better.
scarier?
I think we better. Listeners, thank you as always. Michael Brown, thank you as always. My dear friend, I'll buy you a pint later on. Guys, if you are trading today, keep it tight. Have a wonderful
And please don't
Friday.
do what we've just said.
Please do not, obviously, the fact that we agree on this, take the other side of the trade. I promise you'll clean up. Not trading advice. But take care of yourselves. Have a lovely weekend. Stay safe. Don't forget to factor in the fuckery, as my dear friend Paul would say. And we will see you bright and early on Monday.
We will indeed.
Much
Bye
love.
for now.
Bye for now.